Hey everybody, it's Dan here from Infrares. Hope you're all doing well. So happy New Year, happy 2026. I know it's been a little bit some time since I've done a video, but pretty interesting dynamics we're seeing here in the markets, and I thought we'd do a quick update. So first things first, let's look at here the S&P 500. So, being the beginning of January, we're seeing kind of the S&P 500 steadily and slowly creep up higher. NASDAQ kind of underperforming versus if you look at other indices like the Russell 2000 making all-time highs, Dow Jones, the next better performing index. So if I were to rank what we've been seeing so far, being the 15th of January, is that we're seeing Russell being the best performing index here, Dow Jones next, S&P next, and then NASDAQ the last. So what's happening? Why is this happening? What does this mean? Very simple, rotation. We're seeing money flow into Russell since Russell was the underperformer and didn't perform as well as we've seen previous year with NASDAQ, with S&P, with the high flying tech stocks and AI and semiconductors and so forth. So now we're seeing kind of the broadening happening where other stocks are being picked up and being bought while the high flying ones are kind of taking a breather here. And when you look at the S&P 500 equal weight, right? So this is the S&P 500 equal weight index. This is making all-time highs while the S&P 500 has yet to do it, right? So the S&P 500 is, if you look at the top holdings, concentrated now with a lot of the tech names. But when you look at the equal weighted index, well, we're seeing all-time highs. So, another sign here that we're seeing basically this index continue to move up higher. The RSP again 500 S&P 500 equal weight making all-time highs as money flows into other stocks. So that's the theme for the beginning of the month. Also, we have midterm elections at the end of closer to the end of this year. Something to look forward to. We have Trump come out, talk about how basically started a whole bunch of nonsense with the Fed and talking about defaming Jerome Powell, saying that he's doing a horrible job and how much he's an idiot and this and that for not cutting rates more aggressively. So we know that Trump really wants this and is going after Powell, which was kind of a scary moment when Jerome Powell came out, kind of discussed, gave his little message to the world about what was going on. So because that just question you question about the Fed independence, and that's generally not a good thing. Now we know for sure that Trump is going to select someone that is going to be very pro rate cuts, very pro printing money. We know that's probably going to come soon, probably after May when the new Fed comes in. How soon that will be, we will know more as we approach May and afterwards. We know that also that Trump wants to be injecting money in the mortgage markets and buying up a lot of these mortgage loans and pushing down the long dated bond yields lower by purchasing a lot of these mortgage loans and long dated treasuries. We know that Trump wants to inject the economy with stimulus checks, with these tariff checks, right? So a lot of you're seeing resemblance of COVID time, when all this money, liquidity, QE, and stimulus was injected during that time. And it looks like Trump is trying to push for that. And he's going to do everything that he can to get his way. So, which means that looking forward long term, right? I'm saying longer than a year, 2, 3, and so forth. It could be pretty promising and could look pretty good for the markets and for traders, for investors, as they inject all this money. And if this were to come true. The only downside is the geopolitical tensions, if inflation ramps up again, what will happen after May, how aggressive will they be with QE, and most importantly, midterm elections. What happens? Do they lose the House? Do they lose the Senate? Do they lose both? Is Trump going to be impeached if they lose both, right? A lot of unknowns there. So 2026 could be a year of a lot of volatility. Could be a year, maybe in the beginning first half of this year, we get some nice move up in the equity indices. We get some buying in the broader, in the other stocks out there, like the small caps, stocks on the Dow, stocks more on the equal weighted index, right? Away from the AI names. And then maybe AI picking back up again, NASDAQ, S&P picking back up again, pushing equities higher. We could see this year be a melt up, and then you get basically May come in. And if you've heard, or if you've been trading long enough, you heard of the saying, sell in May and go away. So could we see that? Sell in May and go away? Possible, right? Where the beginning first half of this year, which is nothing but up. And then you get some volatility after May, unknowns, maybe some panics, maybe a black swan event, who knows. And then once the midterm election is over with, we will know and see by then what can we expect. And also, most importantly, is this huge injection of liquidity coming in or not? So we will wait and see. Time will tell. Let me know what you guys think. Leave a comment below, subscribe, hit the like button, bell icon to be notified next video, and I'll see you guys around. Cheers. Bye.